All right, hello and welcome back to Tech in Asia's Product Development Conference 2022. If you've been with us the whole way, thank you so much. If you just joined us, also thank you so much. All right, the next presentation we have is from Alan Singh, co-founder of Dark Matter, and he'll be talking to us about building a Web3 company. There will be a Q&A session after his presentation. So in the Q&A tab, any questions you have, just type them in. Don't need to wait for the end of the session or anything. Just type them in as soon as as soon as it pops into your head, right? All right, Ellen, are you ready?
Yep.
All right, Ellen's ready. I'm ready. Here we go.
All right. Hi everyone for attending this particular session, and thank you TIA for inviting me into the conference. Today I'm just going to share a bit more about building a Web3 company. I think the topic is a little bit wide and very broad because Web3 is a whole ecosystem right now, and everybody runs a Web3 company quite differently. But I think today I just want to touch on several key points regarding Web2 versus Web3 kind of the differences between these two kind of structures and how we do things a little bit differently in terms of processes, in terms of how we approach marketing, how we approach engineering, and it's going to be really a touch and go kind of session. But if you have any questions, please feel free to leave it in the comments, and I will be going through the questions with Winston later on. Right. So yep, just a little bit of an introduction about myself. I mean, I can't do a Web3 presentation without doing a Web2 versus Web3 me kind of meme. And this is me. Previously, I was 8 years in marketing and business development in several tech startups, and then venture into product management role. In my last stint as an employee, actually, I started my career in Tech in Asia, so I'm back home. And then in Web3, I started a NFT collectibles project that was last year called Dark Zodiac. And then we founded a parent company called Dark Meta to actually house this intellectual property, as well as to help brands and creators, musicians launch their own NFT projects. So we are NFT studio, kind of like end-to-end kind of service, as well as we also work on several of our internal projects under the Meta. Yeah. So myself, I'm also an early investor and advisor for Atlas Metaverse, this play-to-earn game. So been around quite a bit in the Web3 space, filling up my time. But yeah, let's go straight into it. I think today I just want to touch on the several kind of agenda. It looks long, but actually it's not. It should be quite digestible. Yep. I think very quickly, I think this next slide is a bit wordy, it's a bit scary, but I think the core message here is to show in terms of M&A movements over the last few years, there has been a lot of activity going on from the acquisition side of things. So we do see a lot of merger acquisitions in 2020, moving to 2021. In 2021, there's a lot of spec kind of deals going on as well in terms of for acquisition purposes. So if you can see, the amount of the dollar value for these acquisitions over the past year has been immense. Especially actually what the data do not include is the deals that happened in 2022. So the first half we do see a huge spike in terms of activity. Even though we do see a bit of a crypto winter coming up right now. We still do have a lot of investors looking to get good deals on crypto related startups. The deal flow itself, in terms of deal count as well as average deal size, has been quite optimistic, to say the least. And then for investment and fundraising, the trend does apply as well. Of course, I think what is lacking in this data is that this only includes equity deals. So companies that raise money through NFT sales or a token sale is not included here. So you can be sure that the number is way higher than this, and I think this is a sure sign. It's a good sign to actually proxy that this industry is doing and growing very healthily. We do have with more capital going in this space, especially by the bigger exchanges like Binance or FTX. You do see a lot more talent flowing into the industry as well. And actually talent is something that will really make a lot of change and difference over the next few years. So I think like first up, I really want to just like get everyone on the same page. So like Web2 versus Web3, like what's the core differences, right? I think Web3 has been thrown around like quite a lot, but like it's not really clearly defined like what Web3 is. But I think like I just want to like jump on a few points. Number one, like accrued value refers to in terms of like if you're a Web2 startup, the more users you have, the more customer data that you have, typically you get a higher valuation for your company. So that value is accrued within the company itself. So, for example, very famous example would be like say Facebook. They have a lot of consumer data of like consumption behavior, the kind of like data habits, basically everything about like its own users in its platform, and therefore they can use this data for advertising purposes. So that's how they make money. And I think Web3 is drastically different. In this area, in Web3, the accrued value is actually to the users. So whenever we participate in a DeFi platform, of course, there are platform fees and trading fees and things like that. But I think like by and large, you don't see that kind of like disproportionate value between the company as well as its users. As mentioned before, like user data, their core business model revolves around like mining like user data. Whereas in Web3 is mostly decentralized. I think I want to touch on a little bit here first to set the context for discussion later on. When we have this decentralized like user data, what it means is that whenever you would interact with a decentralized application or a DeFi platform or a play to earn platform, typically you just like connect your crypto wallet onto the platform, and that is your account. There's no setup in terms of like emails. There's no collecting of like phone numbers or where you stay and kind of like that kind of information. But that has its own pros and cons. The core difference here is that we have. I mean, I used to be from like digital marketing background, and it used to be very easy to track like user in terms of like their user journey, their in terms of the marketing funnel. But it has gotten very difficult because and I think that's the whole point of this, like is to give like our consumers, like users, us, that kind of privacy and liberty to actually do the things we want without being tracked. So I think that will affect like kind of like the processes a little bit, which I will touch on a little bit later. Asset creation and ownership in a Web2 company, typically like the company actually push out features, push out digital assets, push out content that belongs to a company. So for example, if you play a game and you have a particular item in the game, that belongs to the game itself. You are just kind of like, if you think of it that way, you're just taking a loan on that item. It's just tagged to your account. If the game company like decides to go bankrupt the next day, your item goes with it. Right, but I think with Web3, we see from like the advent of like NFTs, these items could be yours. That is interoperable like across platforms, across GameFi like solutions, across marketplaces. So by and large, I think the core principle is that it belongs to the user themselves. For technology, authentication, payments, I think these three can be formed into like one point, and is that like blockchain and smart contracts actually allow users to actually authenticate all these things and actually transact without having like a centralized like a third party. For example, like any payment gateway or tech platform, so to speak. So with the blockchain, with cryptocurrencies, with smart contract, all this is like embedded pretty elegantly. And then like for governance, typically in the Web2, you have a board of directors, right? You have CEO to make decisions. Usually and hopefully they listen to their users. But for Web3, I think a key defining feature will be that they actually work very closely with the community, especially people with a stake in the game, to actually work out like new features and obviously improvements in the product. I want to touch on four very key points here. Why build in Web3? Right, and I think like I'll just like touch on like these four key items a little bit deeper after this slide. In marketing, like for Web2 startups, typically it's like company focus. What this means is that you know the company has a marketing plan. They work with an agency. They push out marketing messages and they do ads, right? But for Web3 startups, it's typically very community focused, and I think that's why you don't see a lot of like this hopefully you don't see a lot of like ads about say NFTs or DeFi projects, but typically like that's because like I think the projects or companies are very focused at building the community of users who actually use their products. For product development, I think very similar. I think when we look at this part here in terms of like the product development process, I'm sure you guys have heard a lot about like from product experts like from earlier sessions about like the processes. The processes are by and large the same. How we work in terms of like product development and engineering in a Web3 company is very similar, except the fact that I think there are more considerations to think about in terms of security, in terms of like smart contract audits. We do have to be very cautious in terms of whenever it comes to tokens and anything that is on chain. Yeah. Whereas if I mean drawing from my experience in a Web2 startup, you can be a bit more iterative. Wherever there are bugs, it's still like I mean it's not pleasant, but by and large you can still live with it. Whereas in the Web3 startup, some errors can be quite disastrous. What happened is that like you do hear every now and then that DeFi platforms get like their smart contracts get or any form of like point of error, they can get like hijacked and they will lose their assets under management. And I think things can spiral down very quickly. For user acquisition, usually like in the Web2 startup, like you look at marketing funnel very clearly, and I'll go through the marketing funnel later on. I'm sure you guys know that. But in Web3 startups, typically like or mainly primarily you're looking at like token incentives as a way to acquire like your initial users and to bootstrap early adoption. And for fundraising, typically you have equity fundraising for Web2 startups. And for Web3 startups, there are actually a few more options. Sometimes there's equity. For example, MetaMask under consensus will be like through equity funding. But most of the time you do see like token sale and NFT sales. And that's how like this kind of like revenue actually help them continue to build like their projects. So I think like first up we want to define like target markets, and then actually these different markets can affect like how you approach your product development cycle, as well as basically how you approach product market fit. And for one, I think on the left hand side you do see like crypto users and Web3 communities. These are people who really know how to use like crypto. They use crypto on a daily basis, or they have interacted with like DeFi apps. They are these people are yield farmers. Pardon the jargons, but like these are people who use and who are very familiar and savvy with like the cryptocurrency like scene. So if you use like wallet count as a proxy for market size, of course this is wallet count because it's not. I mean, we can look at unique wallet as a proxy, but because some of the users will have multiple wallets, so take it a few like multiples downwards, you should be able to get like a right sizing for the market. So for MetaMask, it was recently announced that they have like 30 million monthly active users. So if you look at MetaMask and how it's used, usually it's like for decentralized applications, play to earn games, DeFi, NFTs. So you do have a very wide spectrum of like these users. So it adds up to like obviously the bigger like user base. But if you look at Uniswap, which is usually used for like more suitable for like DeFi or NFT traders, or sorry, crypto traders who are looking at like smaller cap coins, that's like the sort of target users for like Uniswap. Sorry. And then you have 1.6 million cumulative users for OpenSea. So if you're looking at the NFT market, I think that's the sizing that you can look at. OpenSea being one of the largest NFT marketplaces in the market right now. That's a pretty like sound like proxy for the NFT market sizing. I think if you look at these numbers on the global level, it's not a very high number, especially if you look at it like if every user has like 2 wallets. So you're looking at say 15 million unique users for MetaMask. That's not a very big number because like we're looking at 7 point something billion people in the world, right? So I think it's still a very like we're still in the early stages of like adoption. Of course, I think the ecosystem is ripe for hyper growth in the next few years. But I think if you are looking to build your next venture, or you're looking to join a Web3 company, I think that's something that you should be very excited about, because I think it's still a very exciting space in the next few years. These products, if you're targeting like the Web3 communities and crypto users, typically you're looking at like NFTs, DeFi, as well as like if you're building a decentralized autonomous organization, a DAO. And the key focus, like when you look at these markets, is typically like to provide attractive, sustainable yield. So to keep people staying, obviously there must be like some sort of like financial incentive, especially in the Web3 space. I think there are some projects that it's really through community contributions, and obviously there's a bit of like altruism in those aspects. But by and large, for participation in the Web3 space, there have to be like some form of gamification and financial incentive. I name you a very, very simple example, Axie Infinity. So people play Axie Infinity not because it's like the best game ever, but people play to earn cryptocurrencies. And I think we have seen like how it grew over the last like 4 years. Obviously, like now it's tapered down a little bit. But I think that's like the core premise of how people actually hop onto the game, right? It's a play to earn kind of like mechanism. User experience matters a lot, because I think over the last 4 years, I started investing in cryptocurrencies and reading up on like crypto in early 2017. And at that time, you have like decentralized marketplace, decentralized exchanges like IDEX. If you guys know what IDEX is, you guys are old. But now you have like Uniswap, and like the user experience as well as UI design is so much better. I think it serves a very, very practical purpose. And I think if you look at it, in every aspect of like the DeFi or even like decentralized exchange space, even like centralized exchanges, you do see a lot of like UI and UX improvements. And I think as more and more talents like join this space, we can expect like this to improve drastically over time. Community building and like progressive decentralization is a key theme for a lot of like these projects out there, especially the more mature ones, definitely. So community building, I think in 2017, 2018, that's not something that people generally like look at very thoroughly, because at that time there was like ICOs. Community means very little except like having a number like on your Telegram channel or in your Discord server. But I think in like this space right now, community building is actually a very, very important aspect in improving the success of your Web3 product. With a strong community, you can get a little bit closer to product market fit, because Web2, we talk a lot about like talking to users and making sure that they understand how to use the product. Is for us to understand like what are the needs for the products as well. In Web3, you don't actually have the luxury of like calling them up or emailing them, but that community becomes a proxy for you to actually talk to your users. And from there, you can actually get some like very, very good like qualitative like surveys. For first time crypto users, actually this is a really, really big like space. You can have like banked and unbanked consumers who are not into crypto. So I think this aspect is particularly prevalent for play to earn games. So you have these people who are probably not like these users who are not like into cryptocurrencies, not into DeFi, not into NFTs, but they are looking to earn like some cash. So I think that target market is much bigger. For B2B, I think this is also like a blue ocean that people do not really look at it yet. And that is actually servicing like institutional clients. And so dark matter, we service like because like Web2 companies typically do not have the expertise and knowledge to go into NFTs or DeFi. And I think providing that service is actually a blue ocean opportunity. So product types can be GameFi, could be decentralized payment services, and metaverse related like platforms. So the key focus in this aspect, right, for first-time crypto users is about providing sustainable tokenomics. So making sure that like things don't get overinflated, the experience remains like really, really strong. User education, because like that's going to be very, very new for all of them. They do not really understand what self-custody mean. If they lose their funds, they are likely going to freak out. So user education is super, super important. And then like, as always, you kind of need to build a community from there. So I'm going to go really quickly in like the go-to-market like part of things. On the left-hand side, you do see like the Web2 customer acquisition funnel. This is really, really like common for a lot of the Web2 companies. I'm sure like most of you have seen this before. Typically, you have like a funnel for your potential customers to drive towards like a sale or retention. But I think this issue, if you look at the right-hand side, at the top left right-hand corner, you have the traditional network effect. So the number of users scale, you're just like starting out your venture and like launching your product, shipping your product for the very first time, and you do have this cold start like period where you don't have enough users to get feedback. You're trying to get just acquire users, and obviously you have to spend money to acquire them. And this area, right, like will really make or break, because like, as much as we want to have as long a runway to test product market fit, sometimes our runway, they just don't permit us to do that. But for the token like network effect, it actually solves the cold start problem. It actually bootstraps like early adoption issues by actually introducing financial utility. So you kind of provide incentives, which we'll talk a bit like very quickly in the next few slides. But you do get like you get a jump start very, very quickly. But of course, like it solves one problem, it creates a few more down the line. But I think if you are looking to validate your product idea, I think this is a great way to do it. So talking about growth, like if you can't talk about growth unless you can measure it. So I think in these 4 areas, these are some like the matrix that typically we follow, but obviously it varies from company to company. But like for DeFi, typically want to look at like unique token holders, protocol revenue, TVL. For NFTs, I think you want to look at like unique holders, community activity. GameFi, similarly, you want to look at like gameplays, average earn per player. I think that's like really important. And then for L1, L2, like protocol level products, you're looking at like developer activity. Yeah. So if we want to talk about like go to market, a lot of it comes with financial incentive, so financial motivations. Airdrops and grants are like typically the way we see most commonly used. But of course, I think the way that these airdrops are done in today's like scene is very, very different from like 2017. So no longer you get like a $25 airdrop just by joining the community. Typically you have very sophisticated programs that allows the users to actually have certain behavior and adoption in order to receive those airdrops, and typically they're pretty generous. And then you have grants from the treasury of like the protocol or the company to actually help out with like developer activity as well as a partnership activity. So a couple of case studies for ENS as well as LooksRare. So ENS was launched to decentralize governance for the Ethereum name service protocol. What happened is that like that in order to have this airdrop, it's actually based on usage as well as like your terms of your ownership. So if you own ENS domain before the airdrop happened, depending on how long you registered it for, the number of tokens you're eligible for is different. So actually they are incentivizing people to adopt and actually register it for a long time and actually set their primary ENS onto like their crypto wallet address. So you are encouraging them to adopt that service, and in order for a motivation. And I think that particular airdrop was really, really successful, especially because they actually baked the governance protocol process into the token claim user flow itself. So like it was really smooth, and I myself was part of it, and I was really, really happy with the experience. For LooksRare, you have another very, very good example. Obviously, LooksRare has its own like critics, but I think if you look at it like from a kickoff user acquisition point of view, they did extremely well in terms of like getting the kind of like NFT traders from OpenSea. I think as a rival, it did really, really well. So the airdrop was actually like based on adoption activity on OpenSea. So we call this a vampire attack. So based on your trading volume on OpenSea, you get proportionate number of tokens for looks, and then you can stick them and lock it up to earn more rewards. So I think when you have that kind of sophisticated program, it definitely like works very, very well, especially if you have a particular objective that you want to achieve with your users. So for community building, this is really, really important, but I just want to touch on a few principles because I don't think there's a right way to build a community. Most people just like want to build a community the way that the founding team wants to. Obviously, you dictate like how often you want to communicate with your community, but like I think these are like 5 principles that are generally like useful for everyone. Extremely transparent communication. I think if you come from a Web2 background, you will be like pretty shocked because I think in the Web3 space, people demand extremely transparent communications, especially, let's say, about user numbers, about TVL, about basically like how well a product is doing, new features, roadmaps, and things like that. So in the Web2 space, you typically keep it to yourself, but in Web3, you kind of share with your community. You want to like be aware that you are building a global community from day one. This includes making sure that you understand that there are time zone differences, there are language differences, and there are cultural differences from day one, because we don't have the luxury of like building local and then like regional and then global, which most Web2 startups are. But in Web3, like from day one, once your community building efforts start going off, you are finding people from all around the world. Number three, get rid of the like corporate marketing lingo. I think there are some things that as marketers or as business people we say in the Web2 space, but I think in the Web3 space you just want to get rid of that. You just want to take it chill and easy. Which is point four, just embrace the meme culture. Just enjoy, take it easy. And then number five, like just be a gardener. Make it easy for people to take ownership of your community. Yeah, I really want to touch on the tech decentralization principles, but I think we have a couple of questions. So I'm just gonna like cover this in one sentence, and then we can move on to Q&A. Right. So you have this like Web2 tech stack, which is like common for everybody, but in Web3, we want to actually look at how we can decentralize and actually provide that say for the users itself to actually dictate how improvements to a tech stack should be. So the examples of NFT projects can be done as such. The DAO can actually control the IP as well as the tech stack, and then have the community decide what to do with it. So it could be a derivative project, it could be a community event. That is like how we will progressively like decentralize ourselves. Because I don't think decentralizing from day one makes sense. Like you kind of want like certain direction moving forward, and then you let the community take over from there. Yeah. So I will take questions.
All right, thank you, Alan, for that presentation. Very in depth. Sorry to keep it a bit shorter towards the end, but we have do have a couple of questions. Let's get to them before we are running out of time. All right. First one we have from Paul. He wants to ask, right, what can you talk about the differences between building a Web3 company and a DAO, and when's the right time to do either one? When to do which one?
Okay, so I think when we look at, and I think one is a subset of another. So if you want to build a Web3 company and you have a product idea, whether it's like in the NFT space or in the DeFi space or whatever it is, you typically have some form of like corporate like structure set up, right? So that's your like company, right? But a DAO is what you establish with your community. So your users, when I say community, it's like a all-encompassing term between shareholders, right? The token holders, the evangelists, the users, the contributors, and I'll group all of them as your community. And these people are going to be the people who has most skin in the game, apart from yourself. So I think that DAO can be set up after like you have some form of product like set up in your Web3 company.
All right, I'll just take this opportunity to plug the fact that we do have actually a session about building a DAO project that people care about tomorrow. So, come back tomorrow if you want to find out more. Yeah. Okay. Next question. From Muhammad Ibrahim, he wants to ask: given the knowledge that smart contracts can't be used as legal tender in most, if not all, jurisdictions, how do you see the future of DAOs trying to offer off-chain solutions?
Yeah, they are not going to be, the legal space moves slowly, right? So we don't see that happening in the next like say 3 years, but I think over time that will change, because like if you look at change on a daily basis, it moves really slowly. But I think over the last 8 years, you do see drastic change across the world. And one day, like if we do have that, I think it will make all our lives a lot easier. But I think for now, I don't think DAOs. I think DAOs will have to resort to a very manual process in order to handle any kind of like off-chain transactions or accountability. So for most of the members, like that has to come with an element of trust.
Okay. All right. Next question, much more to do with the topic that you talked about, right? What are some misconceptions that you've come across about building a Web3 company?
Oh, that it's easy to make money. Yeah, it's not, right? Because it's like building any kind of company. I think everybody sees like the glamour of like, obviously you have the top kind of like NFT projects making like tens of millions of dollars, if not hundreds of millions of dollars. And you have a lot of these like creators like random. I mean, you guys know what I'm talking about, like creators like launching their own NFT series, or random DeFi projects, especially in the last like 1.5 years back. You do have a lot of these like Olympus DAO, a lot of these like crazy yield farming kind of like protocols coming out. I don't think like money, if it's too good to be true, if it sounds too good to be true, it probably is. And so I think my friendly advice as a friend would be that like you should definitely have a very solid like revenue model, and think about how you want to like structure. Let's say even you want to build like a SaaS platform for like the Web3 space, and you're using NFTs as a token gate kind of like solution, and you probably have to think about how you want to charge for the SaaS product.
Okay, so you got to keep sustainability in mind. Can't just think of this as a get rich quick scheme.
Yeah.
Okay. Yeah, that's about all the time we have for questions. Thank you so much, Alan, again for the presentation as well as answering the questions. All right. So with for the people back home, we have a couple more sessions to close out today. The next one is another keynote presentation. We'll be hearing from Branda Eliezer, the CTO at Secure Access. They'll be talking about DevSecOps in practice, right? So I'll see you guys here for that one.